Sup guys, over here, and today we're going to be talking about the acquisition of Credit Suisse Bank by the UBS. The whole thing happened very fast and very messy, and we're gonna dissect bit by bit what happened. So last week, to no one's surprise really, it became evident that Credit Suisse has some problems. But there were not too much concrete information on that. We just knew that Swiss National Bank offered some help to them, and also that they were in talks with the Swiss National Bank. And we don't know what exactly has been discussed there, whether or not Credit Suisse actually showed the balance sheets and what's on them. But from the future events, we can sort of infer that at a certain point, they were like, okay, if we don't do anything, the bank is probably going under. So they probably looked at it in three scenarios. Scenario number one would be bank going under, effectively winding down its operations. Obviously in this case a lot more panic in already damaged sector. Scenario number two would be an intervene from the government, some sort of nationalization on the bank. And scenario number three, that the third party would acquire the bank. And here we sort of run into the problem because Credit Suisse was already second largest bank in Switzerland, and I will bet on the fact that Switzerland will not allow some international companies, especially US companies, to get into the acquisition, because that can potentially undermine trust for the whole Swiss banking system. So that basically left them with the UBS, which is the largest Swiss bank. And on Saturday we started getting the publications that UBS can potentially acquire Credit Suisse, and that they are offering 1 billion. And the market cap of Credit Suisse based on Friday close was around $8 billion. And the second point in most publications was that the UBS doesn't really want this deal. They were asked by the government, and because of that, alongside with getting a huge haircut on the price, they will also get tons of preferences. After that, we started getting a little bit of different numbers on price, around like 2 to 2.5 billion. And then the final number came as 3.2 billion USD approximately, when the Friday close price on those were just below $2. So they effectively get around 60% discount alongside with the preferences that we're gonna cover a bit later. But you might think, okay, but wait, Credit Suisse is a publicly traded company. So shouldn't they be voting on whether or not shareholders want to sell in the first place, and like at what price they want to sell? The answer should be yes. However, apparently Swiss government quickly passed their emergency law that allowed to bypass this rule. So that's already kind of screwed up shareholders, but that's not all. On top of that, Swiss financial regulator FINMA announced that AT1 bonds of the bank would be right down to zero effectively. And that's around 17 billion worth of the USD. So the holders of those bonds got heavily screwed too. And now onto the preferences of the UBS, and those became possible because the whole deal is basically brokered by the government, by the Swiss government. First, they got a 100 billion liquidity line. And secondly, the government will write off up to 9 billion in potential losses they may occur from anything on the Credit Suisse balance sheet. In my subjective points of view, even considering how UBS got all of that preferences and that they got a huge haircut on the price, I'm not sure if they would want this deal without the government asking them, because UBS was doing fine, and even if Credit Suisse would collapse, I think naturally a lot of assets would flow into the UBS, like organically, without any acquisition, and they would probably could take some of the parts maybe of Credit Suisse if those were up for grabs. So again, it's unclear, but obviously they had to come out with a public statement. The UBS chair, Colm Kelleher, I'm probably butchering the name, sorry for that, told analysts on conference call that, and I quote here, "It's a historic day in Switzerland and day frankly we hoped would not come." I would like to make it clear that while we did not initiate decisions, we believe that this transaction is financially attractive for UBS shareholders. And also UBS CEO Ralph Hamer said, and I quote, "I know that there must be still questions that we have not been able to answer. And I understand that, and I even want to apologize for it." End of quote. Yeah, so very messy deal. In my opinion, shareholders got screwed. But what worries me more here is that they felt the need to do it very fast over the weekend. Because basically the whole thing happened in the course of just 2 days. So they tried to finalize the deal before the markets open on Monday. Yeah, so we're gonna see how markets digest this acquisition. Obviously the financial crisis is not going anywhere. A lot happening in the US, but we're gonna cover that in a separate video. And all eyes on Fed. That's all I wanted to cover today. Thank you for watching. Please drop a like, subscribe to the channel, and I'll see you soon.